Welcome to this complete 5-minute scalping strategy guide. Whether you're trading forex, crypto, or stocks, this video will teach you one of the simplest yet most powerful ways to consistently grow your trading account with short-term trades. Scalping isn't just fast, it's efficient. You can grow small accounts, find frequent setups, and avoid holding positions overnight. But to succeed, you need discipline, the right tools, and a proven system. This video will give you all of that. You'll learn the logic behind scalping, the best time frames to use, all indicators required, when to enter and exit, how to manage risk, real chart examples, and how to scale this strategy to grow a serious trading account. No confusing theory, no fluff, just a complete trading blueprint. Let's dive in. What is scalping? Scalping is a trading method where you aim to make small profits from quick trades. The focus is not on catching big trends, but on entering and exiting the market frequently to capitalize on small price movements. Key characteristics: time frame 1 minute to 5 minute chart. Trade duration usually 1 to 15 minutes. Target: small pip gains 5 to 20 pips. Volume: multiple trades per day. Focus: speed, precision, repetition. Pros of scalping: fast results, you don't wait days for profits. Less exposure to overnight risks, many setups in a single session. Cons of scalping: mentally demanding, requires fast execution, needs strict discipline and a clear plan. Scalping works best in liquid markets during high-volume sessions like London or New York. The key is not just making profits, but preserving them through risk management and consistency. Why the 5-minute chart? Among all intraday timeframes, the 5-minute chart provides the best balance between clarity of price structure, frequency of trade setups, reduced noise compared to 1-minute chart. You can still get 5 to 15 setups per session, especially in active markets like EUR, USD, GBP, JPY, Nasdaq or SPY, BTC, USDT or ETH, USDT. The 5-minute chart smooths out unnecessary noise, making it easier to spot high-probability entries using moving averages and RSI. It's also great for part-time traders. A few focused hours per day can lead to consistent results. The tools you'll need: this strategy uses just indicators and candlestick confirmation. 1. EMA exponential moving averages, EMA 50 and EMA 200. EMA 50 above EMA 200 equals uptrend. EMA 50 below EMA 200 equals downtrend. 2. RSI relative strength index set to 14 period. RSI above 50 equals bullish strength. RSI below 50 equals bearish strength. 3. Price action candlestick confirmation. Look for bullish engulfing, pin bar, hammer for buy, or bearish engulfing, shooting star for sell. These indicators are available on all platforms: TradingView, MetaTrader, Binance, etc. By setup explained. To take along by position. Step 1. Confirm uptrend. EMA 50 must be above EMA 200. Price should stay above both EMAs. Step 2. Wait for pullback. Let price come near or slightly under EMA 50. Step 3. Candle confirmation. Look for a bullish candlestick pattern. Ideal patterns: bullish engulfing, hammer, or a strong green candle. Step 4. RSI filter. RSI should be above 50 and ideally rising. Step 5. Entry point. Enter at the close of confirmation candle. Step 6. Stop loss SL, below the low of the entry candle or below recent swing low. Step 7. Take profit TP, aim for 1 to 1.5 or 1 to risk to reward ratio. Adjust target based on nearest resistance or previous high. Example, entry at 1.200, SL at 1.1985, 15 pips risk. TP at 1.20 to 5, 25 pips reward. Sell setup explained for short sell trades. Step 1. Confirm downtrend. EMA 50 must be below EMA 200. Price must stay under both EMAs. Step 2. Wait for pullback. Let price pull back near EMA 50 or 200. Step 3. Candle confirmation. Look for bearish engulfing or rejection candle. Step 4. RSI filter. RSI should be under 50 and preferably falling. Step 5. Entry point. Enter at the close of the bearish confirmation candle. Step 6. Stop loss. Above the candle high or recent swing high. Step 7. Take profit. TP based on risk-reward ratio. 1 to 2 is ideal. Example, entry at 1.3050. SL at 1.3065, 15 pips risk. TP at 1.3020, 30 pips reward. Risk management. Rule 1. Risk only 1–2% per trade. $1,000 account equals max $10, $20 risk per trade. Rule 2. Define SL before entry. Always know your loss before entry. Rule 3. Stick to risk-reward ratio, minimum 1 to 1.5 or 1 to 2. Rule 4. Max trades per session, 3 to 5. Too many trades equals decision fatigue. Rule 5. Weekly loss limit, 5% max. After 3 losing days in a row, stop and review. Risk management is the real edge, more than entry signals. Common mistakes to avoid: entering before confirmation, trading during news funk and FP, ignoring higher time frame trend, moving SL emotionally, overtrading out of boredom. Solution: build a rule-based checklist and review it before each trade. Backtesting and journaling before risking real money. Step 1. Go to Trading View. Step 2. Add EMA 50, EMA 200, RSI 14. Step 3. Scroll back 3 to 6 months on the 5-min chart. Step 4. Replay chart and simulate entries. Step 5. Track each trade in Excel or Notion. Journal columns: date, pair, entry, exit, SL, TP, win, loss, screenshot, mistakes. Do this for 100+ trades to build confidence. Trading psychology. Scalping needs mental strength. You must stay calm, focused, and emotionless. Mindset tips: accept small losses as normal. Don't force revenge trades. Stick to your plan, always. Take breaks if feeling emotional. The best scalpers are boring, consistent, and robotic. That's your goal. Scaling your account. Once consistent, you can scale using bigger position size. Prop firm capital FTMO. My forex funds, trading multiple pairs with same system. Compounding profits weekly but scale slowly. Never increase risk percent per trade. Stay at 1–2%. Final thought and action plan. You now have everything you need: indicators, entry, exit rules, risk management, real examples, journaling, and psychology. Action plan. 1. Practice on demo for 30 days. 2. Backtest 100 setups. 3. Build confidence. 4. Go live with small risk. Scalping isn't luck, it's a professional method with quick feedback and high control. Stick to the process, stay disciplined. This strategy can be your foundation to consistent profits. Thanks for watching. If you found this valuable, like and subscribe for more trading strategies. Happy trading!